Hello, everyone, and welcome to the live stream event by Yalantis, dedicated to fintech priorities, compliance over innovation, cybersecurity, and cost control. At Yalantis, we help fintech businesses to bridge tech leadership and tech talent gaps with modern technology and software development practices so you can scale, innovate, and monetize your products and solutions. I'm Victor, and I will be moderating today's event. This is kind of a pre party before the Digital Transformation in Banking and Insurance Summit that is going to happen in Amsterdam on October the 12th. And our team from Yalantis will participate in this Digital Transformation in Banking and Insurance Summit in Amsterdam. And if you're going to be there as well, let us know in chat. We will be happy to meet you and network together. All right, but now let's talk about the topic of today's event. The digital transformation and fintech transformation is definitely far beyond just moving from traditional banking to the digital world. And our topic of the fintech priorities echoes with what should be the top of the mind when moving from traditional to digital. Heads up, we have like 1 hour and a half ahead, and every guest speaker will have around 20 to 25 minutes for the presentation and will be giving like 5 minutes for questions and answers. So please put your questions into the chat window of the stream. And introducing the fantastic speakers today, these are Jacqueline Scoof from HashiCorp, Mike Harris from Propel, and Luis Daniel Salazar. And let's start with our opening speaker, Jacqueline Scoof, Senior Technical Program Manager at HashiCorp. With years of experience in developing fintech solutions, Jacqueline will shed light on the importance of compliance and why it will never be overshadowed by trendy innovations in the industry. Jacqueline will guide us in finding the perfect balance between compliance and innovation, discuss risk mitigation and future-proofing strategies, and there will be much more. I'm sure it's going to be truly interesting and insightful. Jacqueline, welcome to the FinTech Priorities live event. The stage is all yours.
Thank you, Victor. That's not a little bit that I'm going to be talking about, so I hope you all enjoy, and if you have questions, please put them in the chat. And with that, I am going to get started. So I'm going to talk about why engineering should care about compliance and not just churning out shiny new features. Though, please don't get me wrong, we definitely do need features, but we want to make sure that we're doing them in a compliant manner. A little bit of extra background on me. I worked over 10 years in companies of all sizes. We're talking Series A all the way through public. I've worked in the front end, the back end, and everywhere in between. I am not a compliance person. I'm in engineering, but I have worked at a lot of fintech companies, and it's very important that we are all aware of compliance, how it affects us for the longevity of our products. I do have a disclaimer. This is an engineering talk. This is not compliance or legal advice, but please always take this into consideration of how important this is to build amazing products and services for our customers efficiently and effectively. So I'm going to start with what is compliance. Banking compliance refers to the set of rules, policies, and laws that financial institutions need to follow to ensure that their operations are legal, ethical, and secure. So those three qualities are very important: legal, ethical, and secure. They are important to keep in mind for your customers, and that you must follow through with in fintech, because oftentimes you're either working with someone's livelihood, their business using processing or banking services, or you're the holder of their funds, which allows them to pay rent, buy groceries, stream Netflix, especially because they're enforcing password sharing now. People need to be able to pay things. So if they can't trust you to keep their money safe, you won't have customers. And being compliant builds that trust between you and your customers. And at the end of the day, customers would rather know that their money is safe than being able to send emojis or holograms with their money transfers. So, why is compliance important overall? Lots of reasons. Here are some of the biggest ones. You've got AML, you've got KYC, risk, fraud, data protection, and PII, which are super important, especially if you're working in multiple regions or geographies. PII and data protection laws are very different in the United States versus Europe. Y'all have GDPR, we do not. So none of this is easy, and customers really build trust when you take all of these things into consideration with what you build. So for example, KYC. Businesses have different ideas. The business has different ideas than compliance and legal of how to do KYC. Business wants signups as quickly as possible with as low friction as possible so that they can get people in and get that stickiness. Engineering wants to make it as easy as possible to build, code, and maintain this. So there's a lot of things that then legal and compliance need to do and get up front in order to be compliant, such as social security numbers, addresses, birth dates. And birthdays is a really interesting one that we'll touch on in a little bit. So when engineering is building things, they need to think about how best to do this now and in the future. And how can they reduce friction, but keep enough to keep that KYC flow compliant and help their customers be protected. So let's talk about some numbers. These are a little scary. According to researchers, being non-compliant can cost big. Billions and billions of dollars big in fines, mostly for big banks. But if you're a smaller fintech, like some of us work at now or have worked at in the past, you could simply get shut down for not being compliant. Or your banking partner, if you have one, because getting banking licenses, especially everywhere in the world, is a large thing to uptake, and you need to be very compliant in order to do it. Your banking partner could take away your license and not let you use it, and therefore you have no business. So being compliant keeps you and your customer safe. Along with monetary costs, there's also a lot of innovation that gets stalled because you're not compliant, and you won't be able to build those beautiful things for your customers without being compliant. And the ultimate goal of any business is to drive revenue. So, with all of those scary numbers, let's talk about why engineering specifically should care about compliance. There's lots of reasons behind this, not just the bottom line, though, we are in business to make money. There are three main reasons that I believe engineering should care about compliance. And they're kind of selfish, kind of not. So tech debt, growth potential, and interesting problems. I'm going to start with tech debt. As you all know, there are a lot of unknown unknowns in software development, especially when you're building a 0 to 1 product, which a lot of time in fintech, that's what we're doing. So we always need to be aware of compliance and regulations at the beginning of what we're building, because it will help us eliminate that tech debt that we always are going to accrue. But because compliance is very well known, what we need for the most part, it's easy to mitigate that tech debt up front. We know it's going to happen no matter what, but we should be able, with good requirements gathering, great compliance partners, and an eye for detail, be able to get a lot of that under control so we can go faster later on. There are stickier areas in compliance that can impede our growth potential, but upfront, it's pretty easy to define what we need to be in terms of getting something out the door. So a little bit more strategic, and this is where a lot of engineering kind of falls, is they're very tactical. If we look strategically about how we want to grow within our products, we can take compliance into consideration and build for today, tomorrow, and 6 years from now. So, for example, KYC dates, which I mentioned earlier. So in the US, we format our dates month, day, year. Please don't ask. It's America. We do some things fun. But almost everywhere else in the world, it is day, month, year. So let's talk about that. How do we make sure that we're maintaining compliance in the US? But if we're a non-US company building for the US or not, how do we make sure we maintain that compliance? Do we want to just switch it on the front end? Do we want to switch it on the back end? How are we going to do this? Do we read it off of the locality of where someone has said that they're located or where they logged in or downloaded their app? These are all things we need to take into consideration. And then because of compliance, we also need to know, how do we collect that data? How do we keep that data? How do we make sure that data is secure? Which of this data do we actually need? And when we're thinking about that, when we're designing our initial application, and we think, hey, in 3 years, I'm currently based in Italy and I want to expand into a different region, let's say the US. What are the differences that I need to be aware of, and how do I plan now, and how much tech debt do I want to accrue that will impede my growth potential later on, or do I not care about that growth potential beyond these factors? So engineering, we need to take that into consideration so that we're building beautiful, easy to use applications that aren't going to make us fall later on. So that leads a little into the interesting problems. How do we surface the right information? How do we scale? How do we build things that are different than our competitors, but still allow us to be compliant and offer services that others don't, or offer those services in a different manner that makes people want to come to our place versus somewhere else? So this goes into a great quote I found from McKinsey and Company, that banks that build common ground between their compliance functions and business leaders who shape strategy can open paths to better customer experience, greater productivity, and resilient growth. So this is something that, really rang true for me, and I like to keep that in mind, is building good relationships between the different groups gets us a better product, gets our customers what they need, and it makes us go faster down the line if we have that strategy between the different groups. So, we've all seen this where we'll go into a meeting, banking partner will be like, no, compliance will be like, no, and engineering's like, but this is really cool. If engineering knows what those rules are, they know where that wiggle room is and can better negotiate with the other lines of business. So, how do we build with compliance in mind? This is going to be a lot, so please get your coffee. Because we now know, what compliance is and why it is so important to the business, engineering can take that into consideration when they're building these products, services, applications, and then they can start worrying about the fun stuff, like building new and innovative things. We've all heard of move fast and break things. But the reason engineering needs to care about compliance is if they know what they can't break, they know what they can. And that's where you get to push those boundaries, figure out where those wiggle rooms are, and be innovative with balancing the needs of compliance, the need of the business, and keeping customers, who are our ultimate, litmus test of what we need, safe, secure, and have that functionality that we're trying to differentiate off of. So we definitely have wiggle room with compliance. This is why I'm not a compliance person. I can say that. But we need to know where those areas are so that we can continue to innovate and build that shiny new thing while doing what we need to do. And here are 4 of the guidelines that I like to think of when building with compliance. Software development lifecycle. So, as you're all aware, requirements gathering is kind of table stakes in what we need to do to build successful applications or products or workflows. And it's really, really time consuming, and compliance in particular slows that down. However, if we incorporate compliance in early in our software development lifecycle, I'm talking, initial requirements gathering, sign-offs at the beginning on our design and architecture, we can build much faster and go to market much faster because we've already done that. CYA, compliance knows what we're doing. It's all good to go. We've gotten everything signed off. And those user stories that, product has gathered, the business has said what we want to do, are now signed off, and we can go build the fun stuff. It's really hard because without having that initial conversation, which are sometimes really not fun, you're not going to be able to go faster once you get those sign-offs. And if you approach those conversations with the compliance folks early in mind by differentiating the must-haves, these are the laws, you have this box, you have to do it, The nice to haves, it's nice to be able to surface this information. It's nice that you have a separate page to agree to terms and conditions or a pop-up for that. And then there's the not necessarily but good. Having those boxes and being like, all right, this is what we got to do, this is what we can, and engineering understanding those differences and being able to ask those questions is tantamount to being able to build beautiful things with compliance in mind. So that goes to understanding the requirements from compliance. And we in engineering kind of speak a different language sometimes than compliance folks and business folks. So being able to have common language and common ground when going into these negotiations is very, very important. And your compliance team should be able to answer the question, is this necessary or is this nice to have? If we go to a different region or jurisdiction, do we need this still? Or is there differences? Because that'll allow you to be strategic in how you're building and eliminate tech debt later on. So, we all want to focus on the interesting problems. Nobody really wants to focus on we need to collect these 10 pieces of data in the exact same way as everyone else. Okay, cool. How do we collect that data easily, and can we reuse it? Can we keep it for later? These are the things engineers need to understand of why do we need this data? What is its purpose? So that they can design a cool, innovative way of getting it, right? Engineers don't always need to know the nuances. They may ask, please tell them. But that's why you hire compliance folks. They know those nuances and they can answer those questions. And so I'm all about knowledge is power, and being able to build that knowledge base really helps with these conversations. And then it's a true partnership between internal and external, and where those different leeways are and where you can find that wiggle room and why certain things need to happen and certain things don't, or you could push off to a later version. So it's really important that you partner with these different groups so that you also build trust. So when you say, hey, I don't understand this, and someone explains it to you, and then the next time you're building something, you're like, hey, I remember that you said that this type of thing was kind of important. Can we make sure that we're staying compliant with it? That trust gets there, and then you can keep going faster. But building trust allows you to have that wiggle room as well, because your partners will know that you'll deliver on what you said that they will. And honestly, if you know the rules, you know where you can navigate and where you can get around them and where you have to follow them. And that allows you to build faster moving forward. So we've talked about the software development lifecycle, which starts kicking off everything, building trust, how you can go faster, understanding where the boundaries and the wiggle room is. And now I'm going to go into an example of building new functionality in an existing application. So this is not net new from the very ground up, but it is building a shiny new feature in an existing application. And some of the steps that you should consider taking if you're going to do something like this. And I will preface this with everybody's a little different. None of this is plug and play, but there are always things that you want to take into consideration when you're building something. Software development lifecycle, requirements gathering, all of that. But for this example, I'm going to go with you have that primary banking application. You've already built that, already done that initial KYC, and now you want to add another product, the new shiny thing, to that banking application. You want to do lending. So one of the best ways to make money, unless you're a credit card company, and in the United States, they're charging interest rates of about 20 to 30%, which is a lot, is having a pre-approved personal loan that goes immediately into your bank account that you can charge interest off of. It's easy way to get money directly into your account, and the company can make money because you can charge interest off of that. So from the business side, you're like, this should be easy. We all have existing customers. We can run a quick background credit inquiry. We know their past spending habits because they have an account with us. We know basically what their risk profile is, and we know what their income is. Should be a quick win. Engineering's like, great, this shouldn't be that bad. get to design some cool algorithms, get to, look at risk tolerance and modeling for that. We get to implement this new workflow for loan origination and how we do repayments. There's some interesting stuff and interesting problems that we can solve that are net new to us, but there's a ton of compliance that comes with this. And good engineers will know, is this actually as easy as we think? Are there things that we need to take into consideration when we're building this flow? And because we've already established as a company that in our software development lifecycle, we pull in compliance folks early, we know that we can't just start with those business requirements of, hey, I want one-click loan approval, because honestly, that would be the coolest thing ever. However, we do still have a lot of things that we need to consider and get signed off on, especially if we're not the loan originators ourselves. We're using a third-party integration. We have a lot of additional PII we have to collect. Where are those lines, and where can we reuse things, and where do we need to gather new information? And your compliance folks should know where this is. Engineering needs to ask the questions of, are we okay to do this? How do we do this compliantly? The compliance and legal teams need to say, here's what we must do. Here's what we could do. And then have those conversations of what works with both sides. What have we already done that we don't need to redo? And how do we make this interesting and easy for our customers? Because again, we don't want to introduce too much friction to any flow, especially because we want these signups and it's a great revenue stream for us. But we still need to protect ourselves and our customers from fraud, from security breaches, and there's lots of ways that we need to take in that information and make sure that we're being compliant. And then this is also where the business stuff comes in of shiny new thing. Hey, quick one button with confetti, you got a loan, versus being compliant and building something that's scalable of, hey, that would be really cool, but we need to gather more information to ensure that our customers are going to be safe and secure. So taking that step back, I put in some of the deliverables of what this would look like. But then on the back end, we need to figure out where we need to go and what we need to do. We have an original flow. We're initially targeting internal customers. So what of that data are we allowed to reuse by regulation? And what do we need to collect again or get sign off on? Because it's a different type of account. How many documents do they need to sign? Is there any implicit agreements that we've already collected? How do we surface this from them? Do we do it as a signed document in a separate email? Can we do it in the application? Does it need a wet signature, or is a virtual one okay? There's all these questions that we need to answer before we just go start building it. Because like I said earlier, tech debt will accrue if we just start building things without knowing the regulations up front. And so it's extra work to start, and then it goes fast. And then let's say you build another product that also requires a sign-up flow, and you've collected 90% of that information. You can probably go negotiate of, hey, we just need to reaffirm the terms and conditions with this person to allow them to do the next product. We've collected all of this info. We just need to validate, get that checkbox, and you get closer and closer to that one button solution. So looking at this specific example, the best approach that I could see was gathering requirements from product, business, and compliance. It sounds really simple, right? Do your due diligence, but you have to get sign-offs on all of this. And it's really important that once you get those sign-offs, you document them and you curate them somewhere so you know what you're going to be delivering. And then you design the front end and the architecture and make sure that's compliant. Data locality is a big thing right now, especially in, India and Europe and the US. How do we make sure that we're building for that data locality now and in the future, or accept that risk of, hey, we can deal with this if we decide to expand our business in X countries in the next 10 years. And then we get to do the fun stuff. Let's go code. That's the fun stuff, at least for engineering. And then testing and launch. So that's a lot. It sounds easy. It's not, because you have so many checkpoints along the way, especially in engineering, that you agreed to deliver something. Now we need to go do it. So I really fall back on have a consistent approach, have compliance early on in that process, and make sure that you're keeping them abreast the entire time, and that it's always in the back of your mind as an engineer, what would the compliance person say? So here's some do's and some don'ts. Still build fun stuff. Come on. That's why we got into engineering. Do the compliance requirements up front so you don't have to go back and check again. Integrate that into your software development lifecycle, and educate engineering on the basics of compliance so they know to ask the right questions early on. And think strategically, not tactically, when it comes to compliance. And never assume it's going to be easy. I know that's a little bit of a duh, but keep that in the back of your mind. Don't assume that because you've already done your KYC, you're done and you never have to do it again. You build new products within your applications or business lines, you may have to redo KYC or just pieces of it and get verification. Your compliance person can help with that. Don't just build for local, build for global, especially the way the world is working now. The global market is going to be your best friend. I'm sure a lot of you know this, so please excuse me, but think about that next country, that next geo, that next region, and how you can make more modular changes and where those changes may be. And then don't just incur tech debt to get something passable out the door. This is like a general engineering thing. Tech debt happens, but where can you mitigate it, and where can compliance specifically cause more tech debt, and where can you eliminate tech debt because you're aware of these compliance functions? And so with that, I am at 25 minutes almost exactly, and I am going to stop and answer questions, I believe.
Yeah, exactly, Jacqueline. Just wanted to say that it was unbelievably insightful. I mean, like, all of the challenges you've mentioned, as well as the terrible consequences of neglecting the compliance in general, is something that really impressed me. I guess, like, most of the people who were listening to this were also impressed, and I got some questions for you, if you don't mind.
Of course.
Great. All right. So the first sounds like this. It's kind of a big one. So people ask and say that compliance efforts often come with the costs. And how can engineers from fintech startups and established companies manage compliance costs effectively without compromising on innovation?
That's a great question. So there's a couple of ways. First, like I talked about, software development lifecycle upfront, know what the compliance is going to be, and then get those boxes of must-haves and nice-to-haves, because that's where the real cost is. Compliance will tell you you have to have everything, right? They're going to be like, no, 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 you have to collect all of this data. And then if you know the generals of compliance as an engineer, you can be like, why do you actually need that? And half of the time, in my experience, they'll go, well, it's kind of more of a cover your butt type of thing. Yeah, I'm not going to swear. Sorry, y'all. So you really should have it, but you don't need it. And that's why when you arm yourself with that knowledge as an engineer, you can push back and find those wiggle room areas and ask those questions of, why do you really need this? And then that helps mitigate a lot of those costs of having to go back, right? We've all seen those things where, like, we're 99% of the way done, we've got the design done, we're in testing, and a compliance person will raise their hand and be like, what about this thing? And you'll be like, no. So in order to mitigate that, you get them to sign off on the very beginning, but also you can ask them why. I think, a lot of the time we all get scared of asking and pushing back against compliance because we don't want to be non-compliant and insecure for our customers because we all want to do the best thing for them. But sometimes the best thing for them is asking that question and being willing to say, that doesn't sound right to me. Like, can we do this in the next iteration? Is this a current regulation or something that we can push off later? Incurring some tech debt in order to balance is okay. You just need to mentally know that you're getting that tech debt and that you may have to deal with it sooner rather than later.
That's awesome. Thank you. Yeah, you have to be compliant enough, right?
Yes, always just balance, right? Make sure that you're keeping your customers safe, but that you're not stopping moving fast because of it.
Great. Thank you so much. And just one more questions before we proceed. When it comes to compliance, there's always a trade-off between in-house built solutions and ready-to-use solutions from third parties. What are your advice on choosing between these two?
So I've worked in a lot of companies and we all like to build our own stuff. We all know this. Nobody can build it exactly for my specs and my customers. However, balancing how quickly and how much it'll cost to build and maintain internally versus externally would be the question I would ask. So, if you're a really small team and you want to focus on building the interesting features and innovative new tracks, and you have the funds and understand and have compliance folks who can monitor a third party tool, that may be better for you. Sometimes it's better to go buy something than it is to do it yourself. We all know this, especially with like fixing our own homes. Should I get a plumber or should I do it myself? Sometimes it's better to get the plumber, sometimes it's better to do yourself, but it's going to be dependent on your business model, your time to market, how much you understand. Like, if you don't have an in-house compliance person, buying a third-party tool where they actually know the rules and regulations may be faster. But you need to know that they're going to be very strict and not allow for that wiggle room the way that an in-house compliance person who you can ask, do we really need this or not? So it depends. I know that's a not straightforward answer, but there's always things to consider.
No, that's totally clear. Thank you so much. And I got one more, the very last question for you, so that we could we'll go on with our event. So you've mentioned an example of building a new product, a landing app, right? How to approach designing user-friendly fintech products while ensuring they meet regulatory requirements. Can you share like specific examples from your own experience?
Sure. So it's hard because I work in the US and I've worked in Europe as well. So there's a lot of nuances between the two. One of the biggest things that I mentioned multiple times is friction in signups and getting that, person through the workflow. So there are things that you need to do to be compliant, and there's things that you can do to remove friction. And those are often and uh, antithetical to each other. So, can you build in your workflow to keep someone moving and just have a pop up or a validation of previous information? So, let's say you want to start buying and selling stocks in your mobile application that is purely banking to begin with. Okay, trading stocks shouldn't be that hard, right? But you have to agree to have someone be your broker for you, all of this stuff. Now, going to a compliance person, I can be like, hey, I already have all of this data. Do I really need to collect it again? And they're like, maybe not. I'm like, how about we just have them validate what we have on file and allow them to edit it? And this will be like 3-button clicks. Much easier for engineering to build, get them their stock stuff, and then we can build all those really cool visuals with purchasing stocks, right? Like you can see like short-term, long-term, you can do risk, you can do all of that. But that barrier to entry, how do we make it from 10 clicks to 3 clicks, right? And that's where compliance comes in and you say, hey, I have this. How much more do you need? Is validation enough? And this is also where you can kind of get in that gray area of this may cause tech debt later, but I'm okay with that because I want to go build the innovative stuff and I don't want it to stop me.
This is great. This is great. Thank you so much, Jacqueline. It was really nice listening to your experience, and I'm sure it's really insightful for the audience as well. But we will have to go on. Thank you so much for sharing your experience. We will proceed with our next speaker. Let's take the opportunity to gain insights into the strategic dynamics that US consumer fintech encounter and how to enhance fintech successful by managing cost drivers. Our second speaker, Mike Garris, head of debit operations at Propel, will actually share all of those things. Mike, welcome to Yalantis and welcome to our live event. The stage is all yours.
Thank you so much. It's a pleasure to be here, and I appreciate the invite. I will get going with screen sharing my presentation. So just one second here. Oh, hold on one second. Okay. Let me know if folks have any issues seeing this, but you should be able to see the title slide of my presentation. Is that right, Victor? Okay. All right. Terrific. Yeah. Well, again, it's a pleasure to be here. And touching on something that came up at the end of the last presentation relating to the challenge of building fintech companies and fintech products, I'm going to continue down that theme. And we'll talk about what to do about it. And specifically that theme about cost and cost improvement, especially for consumer fintechs, so not necessarily business fintechs in the United States. There's two main questions I want to answer, which is one, why is this important? Why should cost improvement for a fintech company be a priority? And then second, where to start? The orientation is definitely for ops leaders and risk leaders and CEOs and others who are kind of looking at the strategy of the company. And I'm based in New York, and I've been watching as much US Open as I can. So I have this little GIF here on the side of getting ready for an ace serve during the US Open. And let's jump in and do it. A little bit about me. I, as mentioned, lead debit operations at Propel. We are a fintech that actually services 6 million low-income Americans, focused on helping them manage their government benefits as well as use a debit product. But I've been at a number of fintechs and have helped from pre-launch through launching a brand new product into the market to managing teams that have over 100 people on them. And really that orientation around scaling is something that I've gotten a lot of experience. I enjoy, and it's also the nature of kind of the phase of company that I have in mind as I talk about some of my recommendations today. Before here, I worked at Bank of America for 7 years and learned a lot about the basics of consumer finance. And so that is relevant for a little bit of what I want to talk about. On my past, I did other non-financial services things, including spending 2 years in the Peace Corps. So let's go into the content of today, which is why is cost improvement important? And I want to take a step back and think about what are we really accomplishing with a fintech in the United States by first looking at what are the incumbents doing, okay? And how do banks actually, what's the business model for a traditional bank, okay? And let's look at a First Hawaiian Bank, a very traditional consumer-oriented bank in the United States. The starting point of a bank's job is they are accepting deposits from everyday adults, right? And these are people who are earning money through their jobs or any other way, and they don't want to hide this in cash under their mattress. They need a safe, secure place that facilitates their spending of their money, but then also lets them save it, perhaps in a savings account where they earn a little bit of yield. And so it's a pretty basic set of needs, and they go ahead and deposit that money in this bank to hold on their behalf. It is not the bank's money; it's actually a liability for the bank, but the bank is happy to do it. And why is one of the main reasons a bank is happy to do it? Because they redeploy that capital. Okay, they don't charge much for actually holding the deposit. Instead, they are making use of that capital by lending it out to someone who wants to buy a home, to someone who wants to buy a car, or maybe a business that's expanding, right? And let's take this real example of First Hawaiian Bank, and the numbers will show you how this actually plays out. So First Hawaiian Bank is a public company, so you can look at their financials. And you see in their balance sheet, according to Q2 of 2023, they held $21.1 billion of deposits. That's how much different households have deposited into that bank as a snapshot in time. And then in turn, they've lent out at that point in time $14.4 billion of loans. Okay, that's not new loans. That's how much is outstanding at that point of time. So that's what their balance sheet looks like. And as stands to reason, the amount they've lent out is actually less than the amount held for deposit, right? That they're holding for deposit. But it's a pretty similar number. So how is this translated to financial gain for First Hawaiian Bank? Well, if you look at the income on their deposits is a couple different fees, but about $22 million that they earned in that quarter. And that's from checking account fees, some debit card, ATM, things like that. So not a huge amount relative to really what the basis of their profitability, which is the interest income they earned from lending out that $14.4 billion. And that was $160 million. Okay. So that for them is what they're trying to, from a business standpoint, accomplish in a profitable way, and makes this bank really run, right? It's not the fees, it's really the ability to redeploy that capital. So let's look at what typical consumer-oriented US Fintechs, what their business model is. And a key component, we just heard a little bit about compliance. Well, a key component of the way a Fintech in the United States works is we partner with a bank to provide some of the underlying services, and the fintech is the front end of acquiring the customers, servicing them, and so forth. But the deposits that a fintech may gather from their customers, right, the paychecks and savings accounts, that is not within the purview of the fintech to then go ahead and lend out those deposits. Okay, a fintech does not have a bank charter that will allow them to do that. Okay, the underlying bank could, and so let me just make this a little bit more clear. So if you look at neobanks in the United States, and here's three prominent ones: Chime, one of the largest, Cash App, the Cash App card or providers, the company I work at. The sources of revenue come from a few fees on the deposits that are being put into the accounts. That's interchange, which is a small proportion of the amount spent, ATM fees, and then there's cash load and other kind of miscellaneous fees on the deposit side. But there is nothing on the lending side. They cannot redeploy that capital for lending. I have an asterisk here because there's some lending programs, but usually it's sort of special programs. They're not actually using the deposit balances to then go ahead and redeploy in the form of a loan. The other main kind of consumer-oriented fintech in the United States are these lenders, right? You have a company, a firm, which is really prominent as a point of sale lender. Prosper, a company that I used to work at, which is unsecured installment loans. Upstart, another large public fintech. On the deposit side, they, for the most part, have no deposits, right? They are not collecting deposits from customers, but they are doing lending, right? And so they do get that side of, similar to banks, that net interest margin on the loans they put out. But the source of capital for these companies, they actually have to borrow the money from banks, basically, in order to have the capital to then lend out to their borrowers. So that is a little, in some ways, less efficient from a revenue perspective as compared to what a bank can do. So this is a challenge for fintechs in general, and especially in 2023, 2022, this is becoming more and more evident. But there are a few advantages that fintechs need to deploy to basically exceed and beat out the incumbent banks. And two angles that fintechs particularly have an edge on. One has to do with technology, and two has to do with the team and the dynamism within these more entrepreneurial companies. And there's two areas of focus where they can really differentiate themselves. The first is the cost to acquire a customer. This is the marketing, the relatability of the brand, building unique product features that banks do not have, and that pull in or attract new types of customers, maybe coming from also new generations or new groups that banks traditionally did not target. Okay, for fintech to succeed, they need to do very well with cost to acquire and have an efficient marketing funnel. I am not a marketing person. I'm not going to give advice on how to do this. And it's not something we're going to talk about today. But as an ops person, we're going to talk about the other component, which is the cost to service. How much cost does the fintech incur for each incremental customer, right? And that, again, with using technology and other strategies, you can turn your fintech to be a winner in the marketplace. Okay, so how to do that? I'm going to talk through three general tactics. This is not exhaustive. It's a little bit more giving you all a flavor of approaches, and there's a lot more detail that would go into actually executing these. But it gives a sense, right? Planting the seeds of how, as an ops leader, you should go ahead and do that. One is you have to start with insight and understanding the unit economics. I'll talk a little bit more what that means. Two is how to use technology to address the root causes of the costs, right? And number three is working with your vendors and managing that expense, okay? So let's talk about the getting a baseline understanding of your unit economics. Without understanding, okay, your incremental cost per customer, it's going to be hard to manage those costs, okay? And there's three considerations I would throw out in how do you paint this picture. First, you need to identify as a company which of your costs are variable costs and which are fixed costs, because the focus needs to be on the variable costs. The difference is between a fixed cost and a variable cost. A fixed cost are organizational and research and development costs that don't necessarily have to increase as your customer base scales, okay? Your HR department, your engineering department, your legal department. If a company adds 1,000 more customers, the company does not need to hire another lawyer or another engineer necessarily, right? But it does need to hire another customer support agent. It does need to pay more to their ATM network because some of those 1,000 customers are going to use that ATM network. So those are the variable costs that really foretell the scalability, the economic feasibility of your company. Two, this is a messy accounting picture initially. There's a lot of invoices, the way vendors charge, and it's not clear what are the variable costs versus the kind of upfront costs. You have to think about how do you break out your customer support costs into unit levels. But eventually, through starting with the big picture and then aggregating that, you then want to allocate that to your customer segments, right? And just to keep it simple, what do I mean by that? Let's just say there's two customer segments. You have your active customers and your inactive customers, right? Your inactive customers might be ones who signed up for your bank account but never did a deposit, and they're just sitting dormant as accounts. Well, you still incur some costs with those inactive customers. So of all of those, let's say your payment processor charges a little bit for maintaining that account. Maybe you need to send out bank statements, so there's some small cost there. So there's some small costs for that. But then you allocate for your active customers a lot of other costs. And just to show here, for example, maybe your ATM costs are going to be really concentrated in your active customers, or any disputes, Regi disputes that those customers incur, right? And so you want to come down to an average number for that bucket of customers. And then second, you really want to manage that number. So how do you do that? Well, one approach is you can establish goals for each of these per customer costs. Right? So maybe let's just take your payment processor cost. Maybe that costs right now about $3 per customer today. How do you get that down to $2.75, right? Or your card network. How do you shave off 15, 20 cents there? And furthermore, depending on how your organization is set up, a good approach is to assign accountability to specific functions in your company. Assign engineering to focus on, let's say, the payment processor costs and bring that down by 20%. Maybe assign your risk team to bring down the dispute processing costs by 30%, whatever it is. And those drive the company objectives, right? And the ideas for what the company should work on over the course of the next 6 months in order to, again, create a sustainable and profitable business, right? A lot of, frankly, these functions embrace the opportunity to take on this challenge. So it becomes a very kind of engaging and fun exercise. All right, so if you are one of those teams, let's say you're the engineering team, how do you start thinking about reducing costs? Where do you even start? Well, taking a subset of activity, okay, that leads to a cost, you want to look for a root cause solution. So what do I mean? Let's just say one of the activities that incurs cost for your company is a payment gets declined, right? The customer attempted to purchase a $20 item and they only have $10 in their account. So that led to a decline of the transaction. There may very well be two costs that happen to the company. The customer does not pay you for those items. The one, your payment processor may charge you a small fee, depending on your contract structure, on declines, right? Maybe it's 2 cents for each decline. And then the network, Visa or MasterCard or whoever, will also charge you a very small fee, a penny or two, for that decline. But at large scale, those numbers do add up. So what, as an engineering team, can you do to prevent that cost? And I'm just giving you a fictitious example here, so don't take this too seriously that this is an overnight solution. But maybe the engineering team says, okay, what about building an internal layer of authorization decision, right? That can prevent these transactions from even going to the payment processor and Visa. So, for example, the payment gets denied by an internal decision engine, knowing the customer's balance is insufficient. And as a result, the authorization request never gets sent to the payment processor and it never gets sent to Visa, right? And therefore, instead of it being a 4 cents cost, there's 0. Now, this is just one example. The point is to move upstream from an activity to find what prevents that activity from being a costly one, right? Just to give another example here, you could imagine this applying in any customer contact to your customer support team, right? Customer calls to support, calls your team to change their address, right? Their mailing address. Maybe they ordered a new debit card and they want it to the new address. Each call takes time of the agent and maybe some software. And in general, that could easily be a $2 or $3 cost. okay? You can imagine a bunch of things that engineers could do so the customer never had to make that phone call in the first place. I'm going to leave it to you to think about the various options there, but it could be a better app service, a form on the website, what have you, and push the customers towards that lower cost option, assuming, again, that it still keeps the customer satisfied. And then they do that other option instead, and you have whatever new cost structure is in place there, right? The point is, get to the root causes of the activity and build solutions there. And in the long term, you have a different cost structure than where you're starting. Third, vendors, okay? And sticking with the US Open tennis theme here, we have a frustrated, overwhelmed player looking at all these various third-party vendors that a neobank or a lending company could purchase, right? And the truth of the matter is that fintech companies are dependent on vendors. None of them, and banks for that matter, build their entire stack themselves, right? It doesn't make sense. So it is part of building a fintech company is selecting vendors. However, there are a lot of vendors, and for a lot of folks, you will be sold a variety of services. And rather than buying what you are being sold, it's important as a leader in an organization to identify what you need and buy that, right? Don't just buy what is being put forward in front of you. There are services that will be put in front of you that might help prevent fraud, or that might make your customer service team more efficient. But that service, that third-party vendor, actually costs more than the amount you are saving from their product, right? And that's the type of evaluation I encourage leaders at fintechs to do. How do you do that evaluation? Don't do the thing on the left, right? Don't be a little kid throwing money out the window because the product seemed cool. As you're going through a vendor selection process, you should get price quotes from multiple options, okay? And you should test those options. And if the product quality and the fit of that vendor, right? Let's just say it's a fraud vendor. If off the bat you could tell it's not a good product quality, such as vendor D in this made-up example, then don't worry about their price. They're out of contention, right? They're not in the competition. But once you have 2-3 vendors, now you should look at the cost comparison. And they sometimes will explain their costs or structure their costs in different ways, their pricing. So you have to boil it down to a common denominator, such as the monthly cost per customer for that vendor service. And then you see what is the lowest vendor. And frankly, you don't stop there. You let vendor A and B know, A and C in this case, what more or less what costs they need to beat in order to win your business, right? And so as a fintech, as a buyer of vendor services, you need to create a competitive dynamic for the companies that are selling you services. And that's the way you end up in a better position. So that's my experience. I will say that some companies, product quality and fit might be the only factor that really matters. And for certain high margin situations, that might be the case, right? So you still have to apply this rule for cost sensitive situations. With that, I'm just going to summarize the main points here. One, consumer fintechs it's actually quite a hard business, especially when you compare the revenue sources relative to banks. And so you need to build an edge on costs to really get ahead. And the good news is I've done that. I've worked at companies where we focused on this, and a lot of headway can be made that is quite differentiated from banks. And there's 3 things as starting points there. Again, create a very detailed understanding of your unit economics. Build out that reporting and the accounting infrastructure so everyone in the company understands your variable costs. 2, use technology to get at the root causes of those costs. And three, aggressively manage your vendor costs. And with that, you'll have a ton of success. Kind of like this little trick shot in the US Open, or not trick shot, but kind of cool shot. So with that, I wish all of you good luck, open to any questions, and I will stop sharing my screen here.
Lagging, but it was just really interesting to listen to going through the world of operations going on in the bank from the inside. Thank you so much for those insights, and also thank you for the advice in choosing the vendors, as well as approaching the unit economics. It was great. Thank you so much. Mike, do you mind if I have a couple of questions for you to answer, audience?
Yeah, absolutely.
That's great. So the first question sounds like this. What are some common pitfalls to avoid when scaling a fintech company? Yeah, sorry, some internet connection issues.
No worries. I think I heard the first part of the question, which is, what are some common pitfalls when it comes to
Yeah,
managing costs? Was it to managing costs or to picking vendors?
yeah. Let me just say it one more time. Sorry.
And if you want to chat it,
Yeah, I can actually do that. Let me just chat it here. Can you see the question now?
yes. So what are some common pitfalls to avoid when scaling a fintech company in terms of cost management? It goes in stages as a company, right? A company, kind of like a child growing up. The way you treat it in its early years is a little different than in its teenage and adult years. And in the earliest years, I would actually say the investment in cost management should probably be light, right? You're really trying in the first stages to build a product that customers like and are going to adopt. And despite what I just talked about, I would actually recommend you focus on the product market fit and the quality of your service more than costs in the first year or two that your product is being launched. And it's in the second stage where you really want to start getting into that deeper understanding of your cost and figuring out, okay, now that I go from 5,000 customers to 100,000 customers, how do I do that so I'm not making my cost go up 20 times, right? And that takes a mental shift for both the folks at the company and the leadership to create new priorities and ask new types of questions to everyone on the team. And sometimes I think some companies wait too long to ask that question. And then they realize, we're running out of money because they didn't do it at 5,000 customers. And then some never do it. And some do it too early, where the product isn't really being adopted by customers yet. And you're managing costs and cutting things out. And at that point, you're not going to scale in the first place because customers don't like your product enough, right? So it's really finding that right point in time to say, okay, now is the time. And I think a gap to avoid, or a failure mode, is going too early or too late in setting that priority.
Great. Well, thank you. Thank you. And I got one more question. I will also type it in chat so that you could read it and answer it as well.
Okay. So what KPIs should consumer fintechs monitor to assess the effectiveness of their cost management strategies? Ultimately, a simple one is your average cost per customer, right? Again, take away the fixed costs. I would not include engineers, the salary, your CEO, any of that, right? But when it comes to your operations teams, anything that varies with customer, right? Think if you doubled your customer count, what other expenses would double? So those costs, figure out how much that is per customer, right? And that's the key KPI to manage down. And if, as an investor in a fintech, I would hone in on that particular variable because that speaks to the potential of your company. Okay. If your variable costs are higher than your variable revenue, then why would I invest in your company? Because that just means you're going to lose more money.
True.
But if each incremental customer is bringing in more revenue than cost, well, then there's a business there worth scaling, right? And worth investing in. So ultimately, it's knowing your variable revenue and your variable cost. That's the single. If I had to pick one KPI, that would be it. But each company, what is made up of that cost is going to be a little bit different.
This is great. This is great. Thank you so much, Mike. Thank you for the insights, and we hope to talk to you again and hear the cool insights from you one more time. Hope you have a great day, and we will proceed to our third, last but not the least, speaker for today. We'll talk about cybersecurity and operational risk in the fintech industry. Which is something that we are going to discuss with Luis Daniel Zamudio Salazar, a cybersecurity and risk consultant. He will enlighten us on the cybersecurity and operational risk in the fintech industry and share holistic risk awareness approaches, strategies for threat detection and response, and insights into compliance and regulations. I guess there will be even more information to come. Luis, welcome on stage.
Hi, thank you. Thank you for the warm welcoming. It's a pleasure to be here. Thank you. It's okay. Can you see my presentation right now? Just sorry, I got some issues on the laptop. Okay. Well, first, yeah, I'm going to talk about cybersecurity and operational risk. The talking is going to be quite different. So firstly, I want you to forget about negative things about cybersecurity and operational, and then we'll go deeper in this talk, right? Well, it's a pleasure to be here with you. My name is Daniel. I'm certified in CSP, CSAM, CEH, ETL COVID. Here's my LinkedIn profile if you want to follow me or chat directly. I'm always open to discuss anything. Okay, thank you. Well, okay. When we think about impact and about cybersecurity and operational risk, and even if you go to any web browser and search engine, you will find these kind of concepts and all these concepts like malware attacks, money laundering, data integrity, third-party security risk, data leakage. And if you, when you're searching this and you're researching on this and you add the word fintech, really it's the same. So my point here is, in fintech, you are facing some risk and some issues that are feasible to all companies right now. I mean, which company is not facing malware attacks, money laundering, third-party risk, technology risk, data leakage? We are all facing this, right? And there is a lot of information here. But what makes interesting about this point, it's that when you think about solution and you read all the papers, all the information that is disclosed in the internet, and all about from companies and recognized firms talking about this, you will find always the same solution. And this solution has been taken into account like for the last 10 or 15 years, and it's always the same. implement digital identity solution, strengthen access control, implement technology. Now we don't call anti-malware solution. Now we call EDR, MDR, MDM, and zero trust, and whatever technology you want to talk about. It is all with the same solution about this. And this solution, it's when you read this solution for fintech companies and to other companies like hospital, health industry, banking, and other services, it's like the same solution and the same problems. There may be no difference that you can really find. So my point right here is that we are not facing how fintech and startups company really works and how we can approach, or how is the correct approach to fix this solution in cybersecurity and operational risk. Okay, and I'm starting with this question. How many of us hasn't read about this question? It's like a pragmatic question that everybody goes by the book, and the answer is always the CISO needs to report to the business, right? Not to any person on technology, because yeah, they have many competing goals. They can prioritize some IT services over cybersecurity, and when we talk about, for example, the CEO, it always says by the book that when you report to the CEO, you demonstrate a commitment to cybersecurity as in three aspects: tactically, operationally, and strategically, right? But reality, for me, in my experience, it's that in a fintech company, this doesn't always work and this doesn't always happen. For me, the real question is how can you achieve effective tracking and communication with all those C-level and all with those figures inside the company? I mean, going from the CEO to the C-level, even to the compliance officer with the local regulator, an auditor, and going on a lower level with a developer, with a DevOps leader, with a COO leader. How can you achieve this effective tracking and communication? And this is a very good challenge because in a fintech company, you are involved in a fast changing environment, in a company that is focused on product and innovation and cost optimization, as previous talk we have here. The environment is very agile. There are changes in technology, in cost, in people, in roles, in duties. Not many times you have segregation of duties. That it's one of the most main principles in information security. You don't have this, and for information security, this is quite difficult to deal with these topics that are quite different in a banking industry or in any more mature company. So this is the challenge. And most of the time, the reality is that also we as information security guys are not aware of these things. We are not aware because we come from a different training. And also, for example, the regulator seems not to be aware of how different is working in a fintech company using cloud, APIs, microservices. And again, these aspects of these priorities that we have been talking here. So for me, this is the real question: how a CISO can achieve this effective tracking and communication, right? So during the last 5 years, I have been working as a cybersecurity and risk consultant, and we have been implementing a quite different focus and point of view for information security, and we have gained some interesting results. So I know that if maybe somebody who is hearing this talk is from information security, maybe is having a heart attack with this first idea of a CISO reporting to the CTO or the CIO or any role in charge of technology. And yeah, it goes against any book, but at least for early stage in fintech company, we have seen that it really works. It is really helpful. And why yes, and let's forget about the why not. The first one is because as a fintech company, all your product and changes, and even like in the previous talk we heard, cost is helped by technology, right? So why yes? Because you will be involved in all product changes, right? And all product changes are related or rely in technology, and that means that you will be involved in all technology changes, and you will have all this tracking that you need to be involved in the whole company. Product, technology, the two aspects that make fintech company works, right? But now, okay, let's imagine that, okay, you now report to the CTO, to the CIO, or any role that is in charge for technology. Now, it comes to the CISO or to the information security guy responsible to know really how to achieve this, right? And I have three main aspects that I'm sure that that we have proof that are working. The first one is the mindset change, that is focusing positive things. Let's be honest, when we talk about the cybersecurity guy or the information security guy, the CISO, or whatever role you want to put it on, it is like the no guy. Hey, chief, we need to release this feature. We need to do it now. No, there is this risk. We can live like here. We are not compliant here. We have a risk here. We can have an incident in that part. We can have a data leakage. Always the information security guy is seen like the no person, always saying no. Okay, so it's important for us to change this mindset from information security and try to focus in positive things. Okay, the second one, it's make everybody your friend. Maybe your friend, or the word friend sounds quite funny, but the idea is that you need to be in really communicating with everyone in the company. Try to understand what they are doing. Try to understand the problems that they are solving. As we got again, I think that previous talk are very aligned with this. Engineers are working to release very fast. The financial officer is leading with optimizing cost. Product managers are trying with innovation, with compliance, with financing, with cost. So you need to be part of that positive and that empathic point of view, not just the person that says no. And the last one that we have put in place and that has worked very good is to train and aware the C-level. Okay, I know that always train and aware it's viewing like the user. It's a layer 8 fail. The user is the most weakest eslabon in chain. It's always the user. But let's get real. Sometimes in the fintech industry, the C-level it's not really aware of the importance of information security. They do it and they implement it because maybe it is a part of the regulator and the local authorities is asking, but the reality is that they need to be trained. Okay, and how can we do this, and how this is perceived from outside and internally? It's very interesting for me. For example, when you search for like a funny thing that like this, that I see risk everywhere. There are a lot of images with scaring attitudes, fearing, risk, cyber. Nobody wants to think about cyber risk because always it is a stopper. In a fintech company, it doesn't really need to have a stop. What a fintech company needs is to improve, to get the business and the security working together right now by the book say. So again, we need to focus in positive. And for me, it's funny even how when you look for something like I see improvements instead of I see risk, the expression and you can find it's really aligned and very similar. No, like we can see words in here like unemployment line, shock results, side projects, accidents, and yeah, that's improvement. You need to sometimes to make some mistakes to get to the improvement and to see that there are some risk in there. What I want to get with this point is that from an information security perspective, we need to stop saying no to anything. But at the same time, we need to put in the shoes of the other person to see what they are trying to do. A very good example for this is like many of the fintechs right now operates in cloud environment, right? And from an information security perspective and all the controls that is in baseline, it always is like, and what is going to happen with the information that is stored and processed in the cloud? Who is responsible for that information? How do you assure that the third party of this vendor of cloud storage is not accessing that information? And there are many concerns about cloud. From an information security, this could maybe no. We can go to the cloud, right? But on the other hand, you can say, okay, yeah, let's move to the cloud, but let's implement some controls like monitoring, like encryption, like segregation of duties. Let's have some controls, some improvements, some monitoring with the vendor. Let's have maybe a multi-cloud environment, and then you are looking for solutions and alternative solutions instead of just saying not. That is something that we always do, and it's again with any kind of process that you see in a fintech company. We were talking they were talking about vendors, for example, previously. It's the same. When you think about vendors, you always want the vendor to have some strict security controls, that they want to assure that your information is going to be safe. But again, you cannot say no. There are a lot of vendors out there that you can work with. There are a lot of vendors that you can partnership. There are a lot of vendors that you need to see and to help that person to look for what you are looking to share, to look for what they are trying to implement, not just saying no. Okay. The second point that we have implemented is this, that is make everybody your friend. This is quite funny, but the point of this is make that people, or make the people to feel important and critical for information security. In that part, we have implemented a group that we have called a security champion or security champions. These security champions is people that it's very involved in the business, but also in technology. And the objective of this is that you, as an information security guy, maybe focus in other things that it's purely security. But as you get this group of security champions, you will have eyes and ears in product and technology, in changes, in incidents, in improvements, in documentation, and many things that you can lose if you are just focused in information security. How can you achieve this security champion group, and how do you make it work? Well, we have do it in this way. Every technology and product guy has an important role in information security. We create a security champions group. We meet with them frequently. We ask them about their ideas to improve our process or controls. We ask them how do they feel if information security it's been a stopper for them to quick release, to quick developing, and they are responsible for proposing controls and improvement in information security, because they are the ones that are in the field getting their hands dirty with developing, programming, thinking, and innovation, and we need that feedback from them. Okay, so that's the first that we are doing here. We meet with them. We can say like it's once a week, maybe once a week, but it has been very helpful. Okay, but the second point is not just to make the group with them. You can let them improve themselves by proposing this control and report these metrics, but acknowledge their job. I mean, one of the duties for a CISO is that they need to report metric or any indicator for information security to a committee, to a board, to know how your security posture is going right now. Let's try to work in metrics or indicators that help also these guys. Like, for example, always we talk about information security metrics, like how many critical incidents have been solved according to the SLA. Yeah, okay, that's very good. But what about if we have this metric in a more composite way and say how many from these incidents have succeed because the change didn't go to the user acceptance testing? How many of these incidents have succeed because there were no QA testing? How many of these incidents of this vulnerability happened because the change management didn't improve the full configurations? That really gives you inside, well, first for the committee or for the board, the big picture of what is going on, but also to the security champions, how important is their job together with all the process of information security, not as an isolated process. Okay. And the third one that we have always working with is that this security champion group that you are facing or that you are working with, they need to be trained and conscious about information security. And when I talk about this is, yeah, they can take certifications outside, are very good, but they need to understand information security for the company that they are working in. You need to train them, you need to make them conscious, you need to give them real examples or real scenarios that are happening in the fintech company that you are working for, to make them conscious about this. If you get these 3 points, we have seen that this has very good results, and you don't get lost in that track of changes in products and technologies, in incidents and improvements in documentations. You are very aligned with this. This concept and this way of work I have talked with a colleague that is Santiago Hill. You can follow him. He is also a talented guy. So it has worked and give very good results. Okay. And the third part that we were talking about is that train and aware the C-level. There are many, again, in internet, there are many examples on many ways to do training and awareness for information security, but it is always focused on the user. I mean, for example, we see like impersonate the executive part of the company. Yeah, and we see it like the phishing email is just sent to the analyst, to the developer, but I have not, to be honest, I have not ever seen impersonate executives between C-level to C-level, like the CEO asking to the chief operating officer to do something, the chief operating officer asking the CTO to execute a critical change. I have not seen that kind of impersonation. So I think that it's a good way, and we have do it, and we have catch the C-level falling in these phishing attacks, right? Include the C-level in real scenario testing, like cyber gamification. This is a very good way of do training and awareness. This cyber gamification is when you put people in one room and you put them for one scenario. They have a specific time to answer, to respond to that scenario. But I have never seen that the C-level is involved in this kind of gaming, in this kind of awareness, to see what happened if the person is not trained, what happened if you don't have the correct tool or the correct configuration, the correct personnel in there to respond, and if that comes from a decision or an structural um, or from a structure that they have decided to implement in the company. The C-level must be included in all of these training and awareness. Okay. Spear phishing, yeah, we always talk about spear phishing directed to C-level, but in order to this to be successful, you must know about the business, you must know about technical stuff, you must know about the enterprise risk management, you must know about external environment and internal impact. Again, the C-level, maybe the CEO is going to receive an email, a phishing, talking about a fake AWS shipping, I don't know, but that's not what he is important in his head. So you need to understand what they are thinking to get them in track for information security. And the other one, and this is very good. I really like it because we have talked again about cost optimization, and the way that you need to convince the C-level, it's not with implement technology at all. More mature companies, I have always, when I go to any information security webinar, people is saying, oh, just let's implement this cutting edge technology that now use artificial intelligence, machine learning, it's in the cloud, and blah, blah, blah. Well, to be honest, at least in early stage in a fintech company, you need to get focused on process. You need to get focused on how it operate. You need to get focused on basic controls for information security, like optimizing endpoint users, like understanding that cloud is not just the responsibility of this vendor. There is a shared responsibility model that you need to implement. There is many things that you can do going from basic and have this baseline of controls very mature, and then go to implement technology. And trust me, when this come to cost optimization, C-level loves this part. Okay, so again, you need to improve yourself, go further infosec, you need to think out of the box. Okay, and well, does it work? Well, at least we have tested this model of work in Mexico with five fintech companies. They passed from zero compliance to ISO 27001, SOC 1, SOC 2, and privacy compliance in less than 5 years. One of them got authorization from local regulator, even with this change in who the CISO reports to, why the CISO reports to somebody in technology. We show indicators. We show how we pass from high risk to low risk. We show we gain tracking in all these changes with technology, with products, and it was an authorizer company. 4 companies of this got from level 1 to level 3 with reference to the NIST cybersecurity frameworks in 3 years, and again with low investment. And this investment from the C-level and the board didn't really increase in first 3 years, right? This is what I was talking about before. You need to go to basics, put your process in place, role, responsibilities, governance, get tracking in this process in this agile environment. That agile environment for security is not just have or be included in sprints, in dailies, you have your canvas there. That's not agility for security, right? We are now working in progress with 8 other companies to implement this model for working. It is going very well. And well, what we can conclude about this way of work is that we have achieved a holistic big picture of the business infosec business, again because we are in the tracking of any change to the product and any change of the technology, but it's practically a fintech, right? And we are working now on how to stop being friend of everyone and getting now everything what happens in the company, because now the information security guy knows the legal guy comes with information security and ask for an advice. The product comes with information security and ask advice. The technology guys want to have meeting more frequently because they are facing some issues that they know that can impact information security. So for these companies that we are working on, the information security responsible has become a point of contact and a point of reference. And in that case, we are now working to see how can we implement this information security inside an enterprise risk management framework. Okay, so it's all from my side. Thank you. Hope I know it's quite different, not so technical, but I hope you like it. And well, do you have any question?
Let me check. Can you hear me now? Can you hear me now?
Yeah. Yep.
Oh,
Yep.
great. Sorry, some kind of connection issues. Just not in time, of course, as usual. But thank you so much, Daniel. I just wanted to thank you for the insights. And I was just listening to you and thinking about like how wow, you have to go into really kind of a deep process establishment in terms of cybersecurity and establish a close connection between the cybersecurity specialist and every kind of role in the company. That was kind of a new information to me. I also liked how you showed risks everywhere and then substituted with the opportunities everywhere. That was like really amazing. I like the positive mindset changing. It's really cool. Thank you so much for the insights. I can definitely see a lot of experience in your presentation. It was great, but I also have a couple of questions, if you don't mind, and I will use chat so that you could read them and see them. Is that okay?
Sure. Yeah. Perfect.
All right, we've got two questions. The first one is about an example, so let's start with it, if you don't mind.
Yeah, for sure. An example is it's about, for example, the change management and how are you involved in this change management. For example,
Can you see the chat? Can you see the chat?
oh, sorry. Oh,
No, no, no problem.
yeah. Okay, just reading.
Yeah, so I will just read out the question. It's about a recent real
Yep.
world example of the cybersecurity incidents or some kind of operational risks that you had to mitigate in a fintech company, right? And what lessons were learned from it?
Yeah, for sure. Yeah, I have in mind very one specific incident that we have, and it represents a fraud, a very big fraud. It was related to an application that is faced to the customers, to clients. This was an internal in-house developer tool. They have made a very good developing efforts in APIs, features, and things like that, but they don't really consider how these APIs and endpoints were uh, requested and called it from the front end, and they were not considering neither the roles and privilege that customers had when they were operating this tool. How do we discover this? Through the change management. When we start making the analysis on how the change management worked, we identify that, for example, the QA tester and the developer guy didn't consider segregation of duties, roles, responsibilities. They didn't test it, of course. And the product manager just said like, okay, this is going to be intended for the analyst client that operates this company. And at the end, we see that at the front end, not just only the analyst could invoke and request this call to the endpoint or to the API. It was called involved by any other clients, and it has it can be a request by another endpoint that was requested by another endpoint, and that was a very good mistake. What we learned from that is that information security requirements need to be taken into account from product managers, that there were no communication from product managers with information security guys, and the QA and technology guys didn't were really aware of all these security requirements. That's what we learned about them.
So
Okay,
again, it
I don't
goes
know.
back to establishing efficient communication processes, right?
That's right. Yep.
That's great. Well, thank you so much. And one more question for you. How can fintech companies strike a balance between innovation and security, especially when introducing new products or services?
Yeah, I think that responsibility really requires in the person responsible for information security, as we were talking about, because if the information security is not aligned with this kind of agile working, with the cost optimization that the company needs, with innovation that company needs, the information security guide is always focusing in, you can do this, there is a risk in this, there will be an incident in this can happen. And that's not the idea of the information security guy. He needs to be in contact to understand what compliance guys need to achieve, what the technology guy needs to achieve, what the QA needs to achieve, what the product manager needs to achieve. For me, that's the really point, to establish a very good communication between these areas. And I think that in a fintech company, we have a very good opportunity to do this. I mean, this is almost by the book. The book says information security needs a holistic picture of the company. In big companies, mature companies, it's quite difficult because there are a lot of segregation of duties. But in a fintech company, it is a very closely team that works very good together. So you need to get involved with this process.
Wow. Wow. Yeah. Yeah, definitely something I will remember for the whole time. I mean, like establishing efficient communication and sticking to the agility is really important for every business and especially important for the fintech businesses. Daniel, thank you so much for your presentation and for the insights. That will be it for today. Thank you so much, and I thank Daniel and all the three presenters today. It was really awesome. Also, I thank all of the guys who are listening to us, all of the audience listening to us. Thank you so much for the questions as well. And thank you for investing your time to explore the fintech priorities with Yalantis and our star speakers. And just a quick reminder, if you're also going to Amsterdam to attend the Digital Transformation in Banking and Insurance Summit in October, October the 12th to be more precise. Let's meet there and continue our conversation about digital transformation and fintech priorities. This will definitely be productive, and there is going to be a lot of room for networking. For all of the listeners, thanks again for your time. It was awesome to have an opportunity to speak to awesome speakers and share this information, which is really insightful and valuable with you guys. Just for your information, you will all get the recordings to your email and the materials required for the presentation as well. Thanks again. Hope you have a great time for the rest of the day. Goodbye.